Hey there, what is going on? It is Rob from Crypto Bob. Welcome to episode 2. And today, during this episode, I want to talk about a couple different things. The first of which being how much money should you really invest in cryptocurrencies, and what's kind of the driving thought process behind why I'm investing a little bit, of my money in cryptocurrencies and what I'm aiming to do. Also want to talk about some of the drawbacks of investing in certain ICOs, and there's one in particular that I put a little bit of investment into, and I'm going to be honest, I have a little bit of regret about doing so right now because of some opportunity cost that I've discovered. And then outside of cryptocurrency, where do I put my money as well? Kind of what's my diversification strategy outside of cryptocurrency, or do I even have one, or am I just 100% all in? So thank you so much for joining me again today on episode 2. If you haven't already, hit the subscribe button up top or down low, wherever that might be, and turn on that notification as well. So, talking a little bit about why I'm investing in cryptocurrency and kind of how much percentage of, not necessarily my net worth, but how much of my kind of investable assets am I putting into crypto. And it actually brings up, I was listening to an interview pretty recently, and it was from Business Insider, and it's from Jason Calacanis, who is a VC angel investor in Silicon Valley. Really has nothing to do with cryptocurrency, but I thought one of the things that he said was pretty interesting. He had recently written a book that discusses angel investing, and I'm almost looking in a lot of ways at cryptocurrency in a way similar to angel investing for me. So what Jason Calacanis, I can't even pronounce his damn name, Jason Calacanis mentions in the interview is how he recommends starting angel investing. And what he recommends is doing between 1 and 10% of your kind of portfolio as a whole into angel investing. And the reason for that 1 to 10% is not to necessarily make the 5 or 10% that you might make in the stock market, but it's to potentially 10x your money or 100x your money. And going into kind of his background as well, and some of my thought process here too, he was one of the angel investors in Uber. I think he invested, they said in the podcast, when Uber had maybe a $6 million valuation. Now it's upwards of 60 or 70 billion dollars. Obviously, that's a ridiculous return on investment. That's almost kind of never really seen pretty much ever. But that's the type of potential returns that I think are possible within cryptocurrency in some respects if you get really lucky on timing and if you can hold and have balls of steel for a really long time. I mean, people that invested in Bitcoin in 2010, 2011 are likely millionaires or multimillionaires now. Same being said for Ethereum as well. So when I'm looking at cryptocurrency, I'm looking at taking, that 5 to 10% of my investable net worth, and I'm looking for those outsized payouts. I'm not necessarily looking to make 10, 15%, or even 20%. I'm looking to make 5x, 10x, 100x, hopefully, in that 5 to 10% of my investable net worth. Now, one of the things that that not necessarily that I recommend, but that I'm thinking in my head too, is that as much of a potential as it might be for these assets to go to, for an investment in Ethereum or for an investment in Status or Omise Go or Bitcoin that might 5x or 10x or 100x, as realistic as that might be, there's also a pretty distinct possibility that these cryptocurrencies can at some point go to zero. I think there's a lot of market forces moving, making that increasingly more difficult as adoption grows, as more people get invested. But there's a pretty distinct possibility, there's a pretty real chance that this stuff can go to zero if the US government comes out and enforces some crazy law or basically anything happens. So with that understanding, though, that's why I'm looking at 5 or 10% of my overall portfolio in cryptocurrency, because I think that the the possibility and the likelihood of some ridiculous gains of that, 5x, 10x, 100x, whatever it might be, are really outweigh the potential of losing 5 or 10% of my overall portfolio. That's a chance I'm willing to take, and I think that's a chance a lot of other people are willing to take as well. Now, would I recommend, or am I personally going to liquidate my 401k, liquidate my IRA, liquidate everything I have in the stock market and put it into crypto? No, because my balls aren't that big. Hindsight's 2020. Instead of investing a little bit into Bitcoin 3 years ago and letting that hold, if I invested every dollar I had into Bitcoin 3 years ago, I'd have my mortgage paid off right now, and life would be pretty damn good. But that's not the case. And like I said, hindsight's 2020. Do I have the risk tolerance for that? Yeah, I probably do. But at the same time, I really can't pull that off. So that's kind of my overall thought process. Is I'm looking at 5 to 10% of my investable net worth into these, into cryptocurrencies, or at least the initial investment. If that investment goes up to, if my investment continues to increase in value, which it is, and I think it is a distinct possibility, it could get to a point where it's 50% or 100% of my overall net worth, and that might be something that, as long as the initial investment is low, I'll let it ride and I'll keep it there, and I'll continue to reinvest those funds in areas and try and diversify within the crypto space. But I think that's really exciting to me, and kind of where my thought process is right now. So again, I'm thinking right now, for me personally, about 5 to 10% is kind of what I have right now, and then I have a recurring buy on Coinbase, and then in addition to what I do really I have pretty much maxed out my 401k at work, put some money in an IRA, and then I also use Betterment as well. I'm not sure if you guys are familiar with that, but it's basically an investment tool which is pretty simple. They have super low fees, and they just diversify your money into a bunch of low-cost ETFs. It's a robo-advisor. I like them quite a bit, and it's something that I'm looking at for 5 to 10% return, but I'm not looking at 5x return or 5 or 10x return. So outside of my 401k, my IRA, and Betterment, that last 10% is where I'm doing that recurring buy on Coinbase. I'm investing more every month. I'm trying to see what's going on there. And I'm trying to kind of dollar cost average my way in after my initial investments from a few years ago that have done pretty well at this point in time. So that's overall my thought process there. Now, another thing I wanted to talk about today, kind of day 2, is ICOs. And I've had the luck or distinct pleasure to participate in a couple different ICOs at this point in time. Status was one that's done well for me. Civic is another one that's done pretty well, not as well as Status, but done pretty well as well. Those are probably more of the recent ICOs that I've had a chance to participate in. And then there was another one that initially caught my eye, and I did invest a little bit in it, and now I'm somewhat, I think, regretting it. Maybe not in the future, but I'll talk about that and kind of some of the hidden opportunity costs behind investing in ICOs. So this one is Credo, and they had an ICO, it's still open. And so Credo had an ICO. They are essentially, it's an email service, and what happens is it's a Chrome extension, and it's trying to reduce spam or eliminate spam. It all depends on if the actual system itself is adopted, and people use this system called BitBounce, which is the overall company, and you send credos to people that you don't know that you want to send an email to. So I work in sales in my full-time job. If I have a bunch, which I do now, if I have a bunch of Credo tokens and somebody that I want to reach out to, I can pay Credos to basically get in their inbox in a prioritized place. So overall, that's kind of what it is solving email spam. There's other similar solutions out there, actually. But this one caught my eye a little bit. Tim Draper, who is a VC in Silicon Valley, who has invested in a number of companies in the crypto space, was kind of one of the initial investors in this project. Since then, they have raised about, as you can see here, about $3.6 million. And there's 17 days left on the actual ICO. But they raised about $2 million in the first 24 hours, and it's really kind of slowed down since then. But the reason I'm in some cases regretting this is the ether I put into this project over the past week or so since I put that ether in. That ether has gone up pretty steadily from the 215, 220 range all the way up to 280 as I'm talking today. Obviously that can dip back down, but that's an opportunity cost in and of itself. If basically the Credo to ETH ratio stays the same that it was during the initial ICO offering, then great, that's fine. But if the Credo to fiat rate stays the same, I lost a good amount of ETH in this transaction because it wasn't able to keep pace with the actual rate of Ethereum rising in the marketplace. So that's one thing that I think is interesting, is in an ICO that is, some of these ICOs like a Status or a Civic or a 10x that literally sell out in a day or an hour or 15 minutes. Those sell out, they close off the ICO, and then a couple weeks later, your tokens are pretty much credited. Maybe a couple weeks later, they're on Bittrex, they're on Liquid, they're on whatever exchange that they're on. This ICO is looking like they're aiming to raise. I don't remember the exact cap that they were looking for, but it was in the tens of millions of dollars, and it doesn't look like they're going to come anywhere close to that. So they're going to let this run for 17 days. So my ETH is held up. I already have the Credo token, so I traded my ETH for Credo tokens. They credited me the Credo tokens. They're in a wallet, but they're not tradable on an exchange, and I really can't even send them yet. So they're kind of just sitting there dead in the water as the rest of the market is moving, which is not the situation I'd like to be in. Most of the ICOs I've participated in, they've kind of happened and they've gone like that. And then I've gotten my tokens pretty quickly and they've been liquid pretty quickly thereafter. This is a different case. Basically, these tokens are not liquid. It's kind of just like funny money up in the air right now, sitting in a wallet. But there's nothing I can really do with them. So that is a little bit unnerving for me, because I would love to. With the amount that they've raised right now, maybe I'm wrong. Maybe this is a good thing that they haven't raised a ton yet, but and maybe that'll just help from a capitalization standpoint to give me some potential to make more money in the future. But I'm honestly, with the lack of the market jumping on it, I'm not too enthusiastic that this is going to be that great for the long term. So that's kind of one thing. And then I think one of the big reasons too, and this is something that maybe people should pay attention to, maybe they shouldn't, but I think one of the big reasons, and I looked into it a little bit, but I didn't realize how much of a negative factor was. I initially mentioned Tim Draper, big VC in the Silicon Valley space, but even bigger cryptocurrency. One of his big focuses really being cryptocurrency. One of the things that I've seen was that he got a sweet deal on these Credo tokens initially. So he was, while in a lot of cases these ICOs you can almost be considered like a seed round of funding, he really got the seed round, and then everybody else kind of got the Series A with the jacked up valuation. So I don't remember the exact number, but Tim Draper got it looked like a pretty sweet deal with tokens way cheaper than everybody else, and it was visible within the white paper, it was visible elsewhere, so people saw that, and when they went to sell these Credo tokens, well, everybody was like, well, this guy just bought tokens for a tenth of the price or whatever it was, or a fifth of the price of what we did, so screw that, I'm out. And that was something that I didn't realize, I think turned off a lot of people, and probably I should be more careful of in the future. As of this time, I'm hoping that I'm kind of sitting back, and like I said, this is something that I think is a little bit of a failure for me. I think it's going to be a little bit of a failure. My money would have been better off in Ether, and shares Neo and Omise Go and Bitcoin. It would have been better, really, I think, in any place right now than sitting in these tokens doing nothing. So that's a little bit of a failure that I figured I'd share with you guys, because I think it's a hidden cost of ICOs. Is there's going to be that period of, okay, you invest in the ICO, you get your token, but how long is it going to take for those tokens to be liquid on the marketplaces? Are they going to be available in a week, 2 weeks, 3 weeks, a month? And what happens in that radius? And where are they going to trade equal to kind of Ethereum or Bitcoin or fiat? So what's going to happen there? Something to be aware of. During these ICOs. Most ICOs is panned out fine for, but in this case, I'm getting a little bit nervous, but it is what it is. You take risks and things happen. So that's kind of my thought process there. Hope you enjoyed this episode. Again, if you haven't yet subscribed, hit the subscribe button, hit the notify button. If you have any thoughts, would love some comments on this. Would really love some comments on this video and to share it around to the folks in the crypto community. Hope you have an awesome day and look forward to coming back for you tomorrow. Thanks so much.